on in a minute. Hi, everyone. Today is Thursday, the 16th of January for Freedom Financial Solutions free Q&A with Cass and Mary Jane. Cass will be jumping on in a minute. She's just stopped to fix her tarp on her trailer. While we start, I just wanted to, while we're waiting for Cass, I just wanted to draw your attention to this really interesting new resource. And it's on our website. I'll just enlarge it a little bit. So on our website, there is a video recording of a seminar, not a seminar, but a Q&A we did a few days ago with legal expert Grant Abbott, and he's heading our legal division, and we're really helping men and women understand how they can protect themselves more robustly. I've just received my copy that I bought of his book, which is called Family Wealth Protection. This is a really good starting point to understand all the pitfalls that there are in this modern age with very aggressive no-win, no-fee litigators that are out there to gobble up your estates. So you can start by watching the recording. The link is on the website here. If you are interested in learning more, then there's a discount code for Grant's book that's also on our website. And then if you wanted to take it further and follow up with a consult with him, he does do a free half-hour consult for anybody who is interested in finding out how they might better protect their estate. In the chat, I have also included the links and the information about that. In the past, we have always offered wills and so on as a service. This goes beyond a simple will. This really goes into looking at how your estate, which is when you die, it's called an estate, how you may be you might be unaware that you are vulnerable to predators that you may never have thought on. And one of the examples that's also in the book is a young woman in her 20s was inherited a townhouse or a terrace house from her grandmother in Melbourne. The litigators got into her ex-boyfriend's ear. They'd been de facto for 4 years. He's a 25-year-old chap. And they had to go to court. And in the end, the court ruled that he was to be awarded $900,000 from the estate. So she had no choice but to sell the terrace and give him $900,000. So this is a very litigious world we live in. So look, start by reading the articles that's on have a look at the video recording. I'll just show you also on our website under news and events. Click news and events. If you go down to estate planning and wills, you can have a look at some very interesting articles that also give you a bit of introductory information. Cass, are you with us? She's there. There's some more people coming in. Just a reminder, everybody, this is being recorded, so if you don't want your face to be shown on a recording, we do put it on YouTube, on our YouTube channel sometimes for people to watch. We don't promote it publicly, but sometimes people like yourselves are interested and ask to see the recording. Cass, are you there?
Yes, I'm here now. Can you hear me?
Yes, I can. So just to remind everyone how this welcome everybody. We've got 10 people or so on. How this works is it's whoever wants to ask a question, you can either just put your hand up on the Teams facility and then it will order you, or if for some reason your sound isn't working, you can put your question in the chat. We go as long or as short as the questions last. We do know that sometimes people just jump on this to listen to what other people ask because you can learn a lot that way. But if anyone's got a question, put your hand up or just start speaking.
And I will say, if you can hear me, that I am stopped at Goulburn at the moment, and then I'll be driving again. So if I drop out, I'll come back again when I can.
Okay. So I think, Eliza, you've got your hand up.
Hello. I've got a couple of questions. One of them is, you know, when you do a will, you just talk about wills. For for a self-managed super fund, that's just a normal will, yeah? And you include the beneficiaries of self-managed super fund in that. It's not a separate piece or anything.
So, Cass, if because I just attended, and you probably know about this as well. I don't know as much yet, so I'll just say what I know, which is you can include it as in your normal will, but there is an SMSF will, which is a new product that is being offered. Cass, do you know any more?
So there's another way of looking at it in that in the SMSF you have what's called binding death nominations. And if you fill in one of those, that covers everything in the SMSF. It's separate to your will. It keeps it out completely separately. And then you will have a will for all your other assets that are separate to the SMSF, like your house and your car and things like that.
Okay, cool.
But the only trick to that is that in your binding death nomination form, you can only include a partner or dependent children.
Yeah, I said see my will.
Yes, so leave it personal.
Yes, I'll do it normal. The other one is in terms of you guys are my accountants, if you like, for my self-managed super fund. What's the relationship between my tax accountant and my SMSF accountant?
Okay, so I can answer that one as well. You can keep them as separate or as close as you want. So say, for example, we do accounting as well. So are you with us or have you got a separate accountant?
No, I've got a separate accountant. Hadn't sort of. It's only now that I'm ready to go that I'm like, oh, how does this interrelate?
Okay,
but it doesn't matter, yeah.
So some people bring their accounting over to us just so it's all under one roof. But you don't have to. You can have a separate accountant. There's not much correlation between the SMSF and your general accounting until basically you're retired. Then it becomes a little bit more intermingled. And the only thing really that you need to know is if you or your business make a tax deductible contribution to the super fund, your accountant should just let your SMSF accountant know.
Right, yeah, because my accountant did send me an email saying, just so you know, I've been advised by the tax office that you set up your self-managed super fund. I was like, oh, okay, so that's just them letting me know. There's no.
Yeah, exactly. That's fine.
So with that, I was going to ask you, I think Mary Jane's talked about this before too, with the tax, if I want to just take 10 grand, let's say, out of my account that I've got and put my savings account and put it into my self-managed super fund, I then I fill out a form and claim tax exemption, yeah? Because I already paid tax on it.
So you fill in a form to say that, yes, you want that as a tax deduction. The SMSF accountant will automatically do that for you as part of their accounting. But that's just where you would then need to let your tax accountant know that, yes, you wish to claim that amount.
Oh, okay. So SMS does, and then accountant claims it.
So that's what I mean. That's the only correlation really between tax accountant and the SMSF accountant is that when you make a tax deductible contribution, both accountants need to know that.
Right. Okay. Then the last question, sorry to hog the space, is with insurance, like if you're buying metals, with insurance, I know in America there's great specifications of storage at home, lighting and security systems. Do you guys have someone that you can put me onto, or do you look at the insurance in terms of in Australia?
We have not really found any insurers that will insure metal.
Okay. So it's not available. So unless you do it via the online, you store it at the place online or pay for it stored there, it's not insured in your home. That's okay.
Not insured, no. I did try that for quite some time, and insurers just aren't willing to insure it the last time that I checked.
Yeah.
Or if they did, I think I found an insurance company that would, but it was like going to cost me $20,000.
Yeah, that's what
to insure it. So I
did
not worry about it.
Yep. Okay. Okay, that's just about me. Thank you.
Okay, Sue Ellen, you've got your hand up next.
Thank you, Mary Jane. Just asking, so I'm 65, I still work, so can I take money out of my self-managed super fund? because I've got some repairs and maintenance to do around the house. Can I withdraw money from it?
Sorry, how old did you say you were?
I'm 65.
But you're still working?
Yes.
65. So once you turn 65, yes, you can.
Okay, so I can just take out what I want?
Yes, whenever you want.
Okay, perfect. Thank you. That was it.
Okay, Dave, you are up next.
Yeah, how you going?
Good, thank you.
I'm looking at setting up a family trust, and we're looking to buy a house as well. Is it worth buying the house through the family trust?
Is it a house, as in a house for you to live in?
Yeah, our personal family house, yeah.
I've always advised them that you do not put it in a trust. Firstly, you lose your capital gains tax exemption, so that when you later sell it, there'll be a large capital gain. You also will have to pay land tax on it every year, which can be quite a lot depending what state you're in. And there's no tax benefits to it. So there really is no benefit to putting a family home into a trust.
Okay. In regards to that family trust as well, if the kids are beneficiaries, do they have their own separate accounts under that trust umbrella?
If they put money in, yes, they can. That's just all part of the accounting for it. The accountant can set up separate
Right.
account that shows any money that the kids have put in.
When the kids get old enough and start working, can they use that family trust as tax file number, or do they have to get their own personal tax file numbers?
Depends whether they're working as a contractor or employed. If they're employed by anybody, they will always need a tax file number. If they set up their own businesses, they could theoretically run the business through the family trust.
Okay.
George, it sounds like you might also benefit from reading the information I've just posted about the Protecting Your Legacy grant. Abbott can also, he's our legal expert in the legal division. He can also help you best understand which sort of family trust structure might suit you.
Oh, is that through FFS?
Yes, he's a partner with us, and he looks after our the sort of estate planning side, but also the family trust. So there's different varieties of family trust. There's a family wealth protection trust as well. So that's somebody that you might want to talk to. But who are you getting to do your family trust at the moment?
I was going to come through you guys, yeah.
Yeah. Okay. Well, then that's great. So when you're ready, just come to us and we can set you up and a consult with him. Okay.
All right. Thank you.
No worries. Now going back to our list of people. So that was Dave, wasn't it? James, I think you're next.
Can you hear me?
Yes.
Yep. Hello, everyone. I have quite a couple of questions, but I'll just start with one. If we have more time to get the other ones, great. The main one was I watched a video Q&A, one of these with yourself, Cass, and you, Mary Jane, and you mentioned around that your super or your self-managed super is in precious metals, and I think it was land or something like that. And I just wanted to get your personal reasoning, if you don't mind sharing around, and forgive me if you've shared this before, the drive towards just precious metals and land, no stock, no crypto, not that I'm big on crypto, but no crypto or anything else like that. What are your thoughts on that in the future?
So I'll answer that. Yeah, I'll answer that one. I am no longer a financial planner. I was for 20 years, but I quit being a financial planner. So we can't give any form of investment advice. All I give is my personal opinion that I just don't believe the share market is going to be a safe place for the future of what's coming in the world. But that's just entirely my personal opinion. If you choose to go into the share market, that's absolutely fine. And the old school advice would be But definitely, you should have exposure to all different asset class for diversification. So share market, crypto, gold, silver, property, everything like that. But yeah, it's just my personal opinion that I don't recommend the share market anymore.
Okay.
And James, just to clarify, I do have a little bit of crypto. I do have a tiny little bit of shares as well, just because I just decided to play with two particular little shares there, not huge amounts, and anything in crypto and the share market is just the amount that I'd think, okay, well, if it's gone, it's gone. Yeah, so we don't recommend anything. It's more just a lot of our clients, this is where they're very conservative. They're looking at protecting their wealth and protecting it through the precious metals in particular.
Yes, thank you for sharing that. If you don't mind, just on the crypto component, I personally, something within my intuition just doesn't trust it, no matter which way it goes. What was your guys, and I'm understanding it's not financial advice at all, what is your own personal opinion on the whole crypto market? Maybe you, Cass, and then Mary Jane, you just got some money in there just to see what it does, and it doesn't matter if you lose it or not. Yeah.
So I've always said, put what you can't afford to lose into gold and silver, and put what you can afford to lose into crypto.
Okay.
So if that's if you're comfortable with say 5% of your net wealth or 10%, it's just what you're comfortable with. That you can sleep at night just going, look, whatever, whichever way it goes. If it booms, great, but if I lose it, okay. And certainly that's what I've done. I've just put a small 5% amount into crypto.
And just for your information, I only invested in crypto after I attended as a presenter on SMSFs and one of our seminars with Ainsley Bullion, and there was the Ainsley crypto guy was there, and I was fascinated with what he was saying. He's famous for having bought 200 Bitcoin when it first came out for I think it was $200, 200 whole Bitcoin. And it went up for, I think it was a cent actually when he bought them, for a cent each. And when it reached $1, he thought, I've made my money, and he sold them all. But that was 15 something years ago. So his name's Chris. He does a lot of the seminars on the Ainsley News website. He's a very educated guy. I was listening to him. That's when I went, right, I'm going to put the grand sum of $5,000 into Bitcoin. So you talk about crypto, but I just basically put it in Bitcoin through Ainsley Crypto. So if you want to, if anybody is interested in dabbling your toes in the water or dipping your toes in the water, but you don't know what to do, they do charge a little bit more of a commission on it. But you can be safe in the fact that they'll hold the cold wallet themselves, and they will vet you to make sure that you know what you're doing. So that's just, someone else has a question in the chat on crypto. So if it's connected, we might just jump to that. This is Annie. She said, I've had your team do my SMSF for the last 2 years. This year I've purchased crypto with an Australian exchange. Can I transfer and store the crypto on a cold wallet off the exchange for security purpose? If so, is there any specific paperwork or anything I need to do to make the year-end process easier for the accountant and auditor? The answer is yes, you have it. Well, many of our clients have it on a cold wallet. Exactly what paperwork the accountant and auditor needs, the best advice is contact your accountant in our system. I don't know who that is right off the top of my head, and ask them, because this is a bit of a moving space, and I don't want to give any advice here that I'm not 100% certain on. So the paperwork for crypto is a little bit beyond my expertise. Cass, do you have any insight into that?
No, only I guess to reiterate what you said earlier, Mary Jane. When I decided to do crypto, I just went through Ainsley Bullion because I trust them. They've been around 50 years, and I just wanted them to do it. And if you do it through them, then they know all the paperwork you need, and they'll have it all compliant, ready for your SMSF. But yeah, if you go through a different provider, then definitely check in with the accountant in our team to find out what they want.
Yeah. So with Ainsley, mine is in a cold wallet. I didn't transfer it. I just bought it through Ainsley. They put it in a cold wallet. And anyway, so you can see the level of expertise in crypto that we have at my end is trust Ainsley, and it went up. Anyway, it did go up, so I was not unhappy. But then we know crypto goes up and down quite a bit. So So sorry, Annie, if you can just chat to or send an email to your actual accountant, and they're the best person to clarify the exact sort of paperwork that you'll need and what you can and can't do. And that sort of goes for any questions that's of a specific nature, because there are things that we may not be aware of at this end, because the accountants stay on top of every little change that's happening. So our comments tend to be more of a general nature. Just while I'm in the chat, there was a question relating to the very first question. Cass, on the concessional contribution, the ATO website says you need to give notice to the SMSF. Does that mean we email FFS to put that request through, or do we email our SMSF ourselves? Can I just follow on, Wallace? What I always say to all of our new clients or any clients, if you're planning on doing a personal contribution, touch base with your SMSF accountant before you do it, because they'll be able to make sure that your concessional caps are all available and everything's correct, and they'll tell you exactly what you need to do. Cass, is there anything else you wanted to say on that?
No, that's fine.
Okay. Now going back to our hands raised, and I'm just trying to get everyone in before Cass, if she drops off the radar. Oh yeah, Magdala, Peter, send an email to Peter. She'll be the one that can help you there. Mika is obviously your accountant, but Peter is her supervisor and has the expertise on all those. Now, George, I think you're next.
Oh, thanks, Mary Jane. Hi. Yeah, my video's not working at the moment, but my question was actually related to the previous answer you just gave about the concessional contributions cap. And because I'm just currently setting up my self-managed super fund, and my question was actually, what is the initial lump sum that we can put in apart from the rollover from a superannuation funds? So I thought that it was about $110,000, but I'm not sure if the ATOs has raised that to 120.
So, Cass, I can quickly tell people what I know in case you're sort of in and out. So there's an annual concessional cap limit, and there's a 5-year catch-up rule. So this year, annually, you can put in 30,000, and last year it was 27,500, and the year before I think it was 25,000. So altogether, if you haven't used all of it, there's a maximum concessional cap of about 130-something thousand. That includes any employer contributions that have been put in. So if you've put in already half of that, that's where you want to talk to your accountant to clarify what you've got left over. But in addition to that, Cass, what else?
There's also the non-concessional cap. Yes, which was 110,000 last time I looked at it, but they may well have put it up to 120. You can also roll forward 3 years of that, which means you can get in like about $330,000 in one big lump sum. So that allows a lot of people to get a lot of money in quickly if you've just set up your SMSF and you want to make some contributions. There is also other contributions you can make, like a downsizers contribution if you sell your house, and quite a number of other things. We do actually have a video on our website, on our YouTube channel, that's all about contributions. Also, you could, and it's always best to just double check with the accountant that you've got at FFSS, just to say, like, if you're planning a large lump sum over 100,000, just contact them and just double check all the different check boxes to make sure that you're eligible for that contribution.
Right. Thank you, Mary Jane and Cass. Thanks for that.
That's good. Next question, Mary Jane.
Sorry, I put myself on mute. So I just put the link in the chat to the playlist, which has sort of ongoing management videos, including the SMSF contribution, the technical details with Cass. Bearing in mind that's now over a year old, so you always want to check in with your accountant to double check the latest, and also they'll be able to see in the back end what you have already used. Sorry about that. Now, just somebody has asked in the chat, where can I find the recordings from past Q&As? There's one on YouTube from 3 months ago. Yes, we have had some downloading issues. I think we've solved those now. I'll be able to download some of the other Q&As and upload them. Cass, can I ask you, are you happy for us to put those Q&As on our FFS YouTube?
Yes, that's fine.
Okay, because in the past we've put them on the Freedom Broadcasting Network, but if you're happy, I'll just create a Q&A section on our. Okay, that makes it easier for everyone. Okay, great. So yes, bear with me. I'll do that. So that was George. So George, you asked your question, didn't you?
Yes, I asked my question, Mary Jane. Thank you.
Suellen, you've got your hand up again.
Sorry, I thought I took it down. That's
Oh, that's okay. No. All right, Delia, it's over to you. You have to unmute yourself.
Sorry. I'm just in the process of setting up my self-managed super fund, and respectful of the fact that you guys are accountants, I'm just wondering if you can suggest anywhere that I could get some good financial advice as to how best to put together a portfolio within that new fund.
Is that within the share market?
Well, within that self-managed super fund, whatever.
But do you want to invest in the share market?
No, not specifically. I just want to secure the money that I do have.
So if you go to a financial planner,
yep,
investment advice, they will put you into the share market. That's all that they do.
Yep.
Whereas we don't do that because I don't trust the share market.
So I'm looking for some financial advice in line with what you offer, someone that would take a more holistic approach.
Okay, so what I'm trying to say is there's no such person.
Okay.
A financial planner, financial advice is all share market based.
Okay.
Share markets, bonds, and a few other things.
Yep.
Whereas we recommend, or I suggest, my personal opinion, is gold and silver, perhaps property, perhaps a little bit of crypto. But that's not financial advice. There's no licensed advisor that can advise you on property and gold and silver. We can certainly just have a chat with you about gold and silver, and in our opinion, maybe put in 50% into this and that. So it's not financial advice, it's just our opinion.
And I suppose that's what I'm seeking is someone's trusted opinion to guide me as to how to structure that portfolio.
Yeah, so personal opinion, I have put everything that I've got into gold and silver, with gold and silver at about a 50% ratio, and a small amount into crypto. And that's as sophisticated as it gets because it's not advice. It's just my personal opinion. That's what I've done. And that's all we're really allowed to say.
And Cass, I'm very conscious of the fact that all my money is currently split between cash and super, and super, institutionalized super at the moment. And I don't own my own home or any property. So I'm just wondering how I could best.
You or me, but you're breaking up.
That's you, Cass.
Can you hear me, Mary Jane?
I can hear you, but if you're having trouble hearing, it's probably your connection. Delia, keep speaking.
So I'm wondering, in your experience, how I might get some exposure to the property market if it's not in actually purchasing my own home.
So, Cass, I can suggest that Jessica Wong is our very experienced property partner. Cass is part of Cass's property team. And she will give you a free 30-minute consult to help you understand what's available, what's possible. She acts as a buyer's agent, and buyer's agents are often much better positioned to get a good deal for you, and they know the ratios, and she can do the mortgage broking and so on. She can also help you understand how to buy property through a self-managed super fund, if that's what you're talking about, and she can do it without the self-managed super fund as well. So that might be a good place to start. I will put her contact in the chat for you.
And would she have knowledge around me actually buying property within that super fund, and or just getting exposure to property without actually buying my own home?
I'm not 100% clear what you mean by get exposure to property, but she can certainly talk property about going through a self-managed super fund or buying it personally, buying it for your own home. She's with Property Advisors Australia, which is one of Cass's companies. Does that make sense?
Yeah, it absolutely does. I suppose when I talk about getting exposure, just when, you know, Cass touched on exposure to different forms of investment, properties, one that keeps coming up, and I'm trying to get a sense of what I might do to invest within property if I wasn't actually going to buy my own home. You know, sort of property shares or an investment.
Oh.
Quite sure.
Okay, so property shares is not something that we do, Cass, I don't believe. But the Property Advisors Australia link that I've put in the chat is a great place to start if you're looking at an investment property, either personally or through your SMSF. That's a great place to start.
Okay.
Do you have anything else?
Shall I throw in my third question while I'm here?
Sure.
Just with respect to the Perth Mint, I'm based in WA, so wondering if you guys have any experience in using the Perth Mint, or would you be inclined to stick with Ainsley and the other recommendations that were mentioned?
So that depends. That's a great question. That depends on how you're planning on holding the metals. First of all, no, we've had no direct contact with the Perth Mint. Ainsley is a Perth Mint representative on the eastern coast, so they represent the Perth Mint. So depending, if you're planning on going and picking up the metals yourself, and you want to go somewhere local, then Perth Mint might be your choice. But if you're looking at other sorts of options, which includes allocated or unallocated, or the Ainsley Saver, which is a sort of a, what do you call it? I've forgotten now, but where you put a regular amount of money in every month, and it's a cost average. It's a dollar cost average account option. That's all done online, and if you ever do want to go and pick it up, then you can, or they can also send it to you. In which case, Ainsley would be who we would suggest, because of their customer service. They're absolutely fantastic. And someone else, Annie, has asked a question: would it be a good idea to store precious metal with Ainsley Bullion, either allocated or unallocated? I've heard Cass mention that she likes to store it at home, but I'm not sure which option would be the safest. Safest is always it's a value relative term. What's safe for you might not feel safe for me. In the past, Cass and I both stored everything ourselves, whether it was at home or somewhere else in a secure location that we only knew about. But given our sort of profile of the last couple of years, we have chosen now to store most of it either in the Reserve Vault, which is in Brisbane. There's the Melbourne vaults in Melbourne, but for us, it's more convenient in Brisbane. So that's where we have our own storage lockbox, and there's a key, and I have a key, and they have a key, and you have to be there physically to open it and close it yourself. And I'm the only one that can see into my box. So that's where some of it's stored, but also unallocated. Allocated and unallocated are almost identical. Unallocated is a bit cheaper. You don't pay for storage, but because you don't pay for storage, your name is not on a particular block. So you own the block, but if and when you go into Ainsley and say, I want to pick up my block or my cast bar or my minted coin, they will just say, oh, how much is it? Oh, it's an ounce. And they'll pick up the first ounce that they come across. It might not look pretty, might not, and they'll give it to you. That's your ounce. Allocated, you do pay for storage with Ainsley, and your name, they put your name on a particular block and they put it on their storage shelf. So when you go in to pick it up, they go, oh, there is Mary Jane's block, cast bar, or minted coin, minted bar. But unallocated and allocated and unallocated are both stored in the Ainsley storage area, their vaults. So what is safe to you? Cass always says, look, especially silver is really heavy to carry. So that's when you can go online, you can go, oh, silver's dipped a bit, I'm going to buy some. And it's in the unallocated vault. You don't have to go in and pick it up. If and when you want to pick it up, when the zombies come, you can do that. So Cass says, in her experience, mine as well, silver's really heavy to carry, and I don't want to be lugging a lot of silver around. It's also very bulky to store. So we tend to now only buy silver in the unallocated pool. We do have some in the reserve vault as well. Maybe we've got a little bit at home as well. We couldn't possibly comment. So the concept of what's safest is up to you. Some people think storing it yourself is safer because you've got it right there. Other people think, well, someone could come in, put a gun to my kids' heads, and I'll tell them where it is. So it's safer in a vault. Other people say, well, the vault, what if they lock it down? I can't get to it. So really, that's something you just have to weigh up the pros and cons. One of the other things Cass says is, if you've got a safe at home, why don't you have a dummy safe or two? She used to have some fake coins. This is a fake coin. It's not an ounce of real gold. It's not a coin. It's a minted bar. She had some dummy safes where she had some fake gold in there. And then she had another one which was very, very cleverly hidden. So if somebody ever did come and put a gun to kids' heads, she'd go, okay, there it is, point them to the dummy safes. There's lots of different possibilities. So there's no yes or no answer to that one. Sorry, Annie. Now back to property. Kay in the questions had a question. I'm considering buying property and I vaguely remember something about Queensland being better than New South Wales. These are the two I'm tossing between, maybe about land tax, etc. What are the pros and cons of each state? Have a chat to Jessica about that. She's the property expert now that Cass seems to have more or less dropped out of range. Cass, if you're there, you can speak.
Can you hear me?
Yes, I can hear you.
Okay. Yeah, excellent. No, as you're saying, chat to Jessica. But we have recommended Queensland over any other state for basically the last probably 10 years. It's just cheaper. You get a much better quality product for your money in comparison to a lot of other places around Australia. Got a lower, just a lower price range, and it's fastest growing. It has been for the last 10 years, and that continues to be the case leading up to the Brisbane Olympics. But Jessica can definitely talk you through all that. So whilst I'm on, I was trying to talk when the other lady was talking about property, and the one issue with property, and I think exposure to property is the wrong term for it. You either buy a property or you don't. And if you buy a property in an SMSF, you're going to need at least a 30% deposit. So you're going to need to put at least $150,000 or $200,000 down as a deposit. So it's a very difficult asset to diversify into. You can't just put $20,000 into property. You either do or you don't. There are some fractional property investments around. but they are basically still a share market exposure, which I don't feel good about putting anything in the share market.
Thank you, Cass. Now, Patrick, you are next with your hand up.
Yeah, g'day. Just a couple of questions about the self-managed super fund. My understanding is to set it up, we need to set up a bank account that my current super balance would then be transferred into. And from that bank account, we could then choose to purchase gold and silver as part of the self-managed super fund.
Yep, sort of.
Yeah.
Yes.
Okay, so moving forward, would my
Sorry, just to clarify, what happens is the SMSF has to be set up first. So that's a whole bunch of legal paperwork that you would sign to appoint the trustees and the self-managed super fund. It's registered with the ATO, the ABR, and ASIC. Once it's complying with the ATO, then you can set up, or we do that as part of our process, set up as a bank account in the name of the self-managed super fund. So it's completely separate to your personal accounts. And then once that bank account's open, then we can request the rollover. The money rolls into that bank account, and from that bank account, that's where you'd be making your investment purchases.
Okay, thank you. And then so once that was all done, my employer would then pay the contributions into that account. Are there any rules or restrictions around how long the money can sit in that account before you need to invest?
Not at all. In fact, you don't need to invest in anything other than cash in your SMSF bank account is a legitimate investment. I mean, it's not what most people do, but I always tell our clients there's no need to rush into making an investment. You absolutely do your due diligence. Once your money is sitting in your bank account, when we open it for you, we open two bank accounts. One is the cash management bank account. That's the one that your employer puts the contributions into, and that's the bank account that you make the investment purchases out of. And that's at the moment 2.65% interest rate, which is not bad. We open a side little pocket account, which is called an accelerator account. That's 4.65% at the moment. So if you're letting your money sit in there for a little while you do your due diligence and decide what other investments to make, you can transfer internally from the cash management into the accelerator account and let it sit there to get a better interest rate. There's no fees attached to it. There's no lock-in. It's not a fixed-term deposit. It's like a fixed-term deposit with the benefits, but without the cost or the restrictions. So you can have it sitting in there for as long as you like while you get ready to make the investments.
Okay, great. And then if we use yourselves to manage the fund moving forward, any fees and whatnot that are associated, can they come from the fund or do they have to be paid from another source?
No, they all come out of the self-managed super fund. In fact, they're supposed to come out of the self-managed super fund. So what you need to think about is, so the accounting fees, which is what we charge, we divide the annual fee by 12 and charge it monthly. So it's just $100 and something or a few $100 coming out of your bank account each month. The audit fee comes out once a year. The ATO will charge you separately once a year, and then the ASIC renewal fee for your company, which is $65, comes out once a year. So we recommend keeping a few $1,000s in your bank account just to make sure you don't have to worry about transferring money in and out. But some people who invest in precious metals, for example, prefer to have all their investments in the metals and just have maybe 1,000 or 2,000 in the bank. And if they need to top it up, then they'll just sell off like an ounce of or less of gold or a kilo of silver or something to top up their bank account. Or their employer contributions are topping it up anyway. So that's sort of how you manage those fees.
Okay. Are they tax deductible, those fees?
To the SMSF, yes.
Yeah. Okay, beautiful. And just one more question. Just regarding if you were to go into precious metals and you wanted to keep it at home, what sort of rules are there around? Can you choose to store it however you please, or are there certain restrictions?
Yeah, so the different people will tell you different things. If someone says you have to buy XYZ safe, or you have to put it in a storage facility, just ask them to show you the legislation or the regulations around that. There aren't any. So what it says is that as a trustee, you are required to keep it secure. And Cass has argued 16 years ago, well, frankly, secure to me doesn't mean having it in someone else's vault. I want to keep it where I know it is secure. So you can absolutely, a lot of our clients do, and our accountants and our auditors are very accustomed to the fact that people are self-storing either at home or somewhere that's in their control. And what they do in that, what you have to do in that instance is once a year, in the first week or so of July, buy a newspaper which shows the date very clearly, put that on a table, put your bullion on that, take a photograph. If you've got so much that it doesn't fit in one photo, you might take a video so that it's continuously showing all of it. At the very least, the auditor wants to see, or the accountant wants to see as well, the same type. So if you've got 10 1-ounce bars, she wants to see all the 10 1-ounce in one photo. So you take a photo of that and send it to the accountant, and then that will be part of your annual company statements, which will look like that. So a lot of work goes into that. And that'll go to the accountant and auditor for the tax return.
Okay, look, fantastic. Thank you very much for your time.
That's okay, Patrick. Eliza, you've got your hand up. You have to unmute yourself, Eliza.
Beautiful. Just following on for that, if you do buy a vault, just from the conversation you just had, if you did buy a vault to have at home, does that cost come out of your self-managed super fund?
It can, yes. So the regulations around that is that it must not be used to store anything else. So you can't store any of your personal items or your passport or your birth certificates or anything else in it. Does the auditor come around and open your vault and check whether you're doing that or not? No, but they are the regulations that you undertake to understand and abide by when you become a trustee. It can come out of your SMSF. Ideally, you buy it from somewhere where they will issue you with an invoice, and you can pay from the bank account to that supplier into their bank account, because the auditor wants to see that it's going out of that bank account. At worst, because a lot of the times you're buying a safe that's a few $100s or $1,000 or something, and it's not, they're going, oh, I'm not going to give you an invoice, just buy it here over the counter. You can do that, pay for it yourself and reimburse yourself for that purchase from your SMSF bank account. It's not ideal, but it is acceptable but you must have a receipt.
I could just buy my own and forget about the self-managed super, just out of my own cash anyway.
Yeah,
So no trace of it. Yeah, okay, thanks. Thank you.
You're welcome. Right, so there are no other people with hands up. We are at almost, famous last words. George, go for it.
Thanks, Mary Jane. Yes, just a quick question on the withdrawing money from your self-managed super fund to pay for expenses. You were saying it is ideal to withdraw from the SMSF account to your own bank account?
No. So you can't. So there are very few expenses that you can pay for to start with. The two examples that I'll give you that are very common is when you can pay yourself back is when you ask us to set up your self-managed super fund at the beginning. We'd ask for a $660 deposit at the beginning. Now you have to pay that yourself, and then at the end you can repay yourself that money. The other common item is a safe, which if you have to go to Bunnings or somewhere to buy a safe, Bunnings I guess is possible. They have some good quality safes. Bunnings is not going to issue you with an invoice, so you will have no choice but to buy the safe, get the receipt, and then it's not in any name, it's just a receipt. The accountant may ask you to write they will prepare a minute for you saying this is a safe for my self-managed super fund, and then you can repay yourself that amount of money. But there's almost very few other instances where there are any expenses that you might be reimbursing yourself for. Did you have anything else in mind?
No, that was just that, Mary Jane, just the initial deposit there, or the fee for the setting up the self-managed super fund.
Oh, that's not a problem at all, because that's very clearly shown on the invoice that we send you at the end.
Right. Okay.
No.
And that will come out of the Macquarie Bank or your bank account.
Yes. So what happens is, once the process is finished, your super money goes into your Macquarie Bank account. The first, and I like to say this, the first Macquarie purchase that you ever need to make, or online banking you ever need to do, is to yourself. And basically you go in online or on your app and you pay yourself back the $660. And it's kind of a good exercise to get yourself used to doing the online banking with Macquarie, because every bank is slightly different. And then the second payment that you make is for our rest of our invoice. So it gives you 2 chances to get used to online banking with Macquarie.
Good. Thanks, Mary Jane.
That's okay. Now, Magdalena's got a question in the chat. Does the cost of going to buy the bullion for your SMSF in the state become claimable? That's a great question. Unfortunately, no. How it works is the other cost that you can charge your SMSF is if Ainsley Bullion were to mail you the bullion. That can come out of your SMSF, because the sole purpose of that transport payment is for the bullion. The ATO does not allow for personal travel, where you can't pay for your petrol, accommodation, train fare, bus fare, anything for you to go and pick it up. And the reason is that you may have therefore you're gaining a personal benefit from that travel. I didn't make the rules, but that is the ruling. So unfortunately, no travel that you do personally in any way, shape, or form can be paid for out of your SMSF. And that
Thanks,
goes.
MJ.
That's okay. That goes for training as
Sorry.
well. You can't buy some training even to learn more about self-managed super funds. There's nothing that you can't buy a laptop that there's nothing that you can pay for yourself, unfortunately.
Yeah.
Delia,
And sorry, just to clarify, was it the shipping? Did you say the shipping cost
Yes.
of if they send it to you? Okay.
Yeah.
And you just need the proof of the shipping, I guess, to keep on file, or how do we?
Yeah, absolutely. So if you do it through, or just I keep saying Ainsley, and there's as Good as Gold do it as well.
Yeah.
A lot of them will send it to you. They will send you a receipt for the freight as well.
Yeah. Okay, excellent. Yeah, because I'm based in Canberra, so I'm pretty much buying my interstate anyway. So that's good to know that the shipping can at least be reimbursable. Thank you so much.
Yeah. All right. Now, Delia, you had your hand up.
Mary Jane, just as far as furthering my own research in the absence of advisors that are perhaps aligned with what we want to do, Cass mentioned a couple of names of financial professionals that she has followed. Is there anyone in particular you would recommend, or anywhere I would go to further my knowledge?
So I'll just write it in the chat. John Rickard, I think it is John Rickard. Let me just.
Can you hear me?
John Rickard. Sorry.
Yep.
Oh, Cass. Yes. Yeah.
Robert Kiyosaki.
Yeah.
He actually has some quite good online financial education. Bear in mind it is US based, so some things they talk about aren't going to be relevant for Australia. But yeah, Robert Kiyosaki's been a great financial educator for decades, so he is pretty good.
Thank you.
Yeah.
You're now on mute, Mary Jane.
Thank you. I was coughing. Ainsley Bullion also has a very...
Hey, everyone, I'm going to jump off now. We've got a bit of a load problem going on.
Okay, Cass, thanks very much.
Bye.
Bye. Ainsley Bullion has a great website. In fact, I might just share it with you so you can see. It is the news and resources section. Has news, resources. Insights is very informative. Dollar cost average. I often go through this and try and pick out the most relevant to our clients. There it is, resources. gold silver ratio explained. There's some really basic articles that are helpful there as well. And also on our website, under news, it's getting a bit slow here, news and events, there's a little section here, bullion must read, SMSF must read, and then every week we'll put out an article, or maybe two sometimes, to give you a sense. But Delia, as Cass was saying, yeah, it is hard to find. You know, in an ideal world, we would like an independent financial advisor who will cover all the asset classes. Unfortunately, in Australia, what's called a registered or licensed financial planner or advisor primarily deals with the stock market products, and the other areas are regulated. So there's no one that needs to be licensed to talk about gold and bullion, gold and silver. And then obviously the property area, you've got your real estate agents and property experts there. George, do you have a question?
No, Mary Jane, I think that was all for the, oh yes, in regards to the concessional contributions cap, if your employer has put in only say $2,000 for the financial year, can you top it up with a concessional contribution?
Absolutely. And that's why it's unless you're sort of going, you can see them in MyGov in your super summary, but it's easier for most people to ask their accountant to give them a summary of what they can contribute to bring it up to that cap. So let's say this year it's 30,000 and your employer's only contributed 2,000. You've got $28,000 that you can shove in there under that cap, and there's a 5-year catch-up rule. So if you've used almost nothing over the last 5 years, there could be, you know, $130,000 worth of concessional cap available for you. But the best person to get the exact numbers is your accountant, your SMSF accountant.
Right, so I need to speak about that with my accountant there, SMSF.
Your SMSF accountant. So, George, I understand that you're about to put your SMSF order in. Is that correct, or are you in our system already?
It's going through at the moment. So
okay.
I've put in the initial fee,
yep.
And that just went in there just before Christmas.
Are you GRL? No. What's your SMSF name?
Belasco.
Oh, Belasco. Hi, George. Yes, we're going to be sending you an email later today with some information as a follow-up to that. Sorry about the delay. There's been a massive catch-up in the last 2 weeks that we've been going through millions of emails. So sorry about that. So yes, so what happens is once my team, the setup team, completes the process of setup, which means your money is in your bank account, we will then hand you across to Peter, P-E-T-A, her accounting team, and she will allocate you an accountant, and then you'll be able to have a consult with her. Just book it in free once you've engaged them, and she'll be able to tell you exactly where you're sitting with your caps. Okay?
Okay, thank you so much.
Yep.
Sorry, Mary Jane. Peter won't be my SMSF accountant.
She may be.
She may be.
She may be. She's the team leader and she has a team under her, but she also does accounting, but she does most of the consults as well.
Okay, thank you.
You're welcome. Now we've got 1 minute for one question. Mary Jane, gold and silver just continues to go up. Who are you following to see what the future growth predictions are, please? Ainsley Bullion, again, now I do look at a lot, but Ainsley Bullion are really good in this space. And I will share my, oh, hang on. Oh gosh, sorry, I shouldn't be sharing that screen, should I? Sorry about that. Ainsley, what am I doing? Ainsley has the news and resources here. Now, the resources, the history of gold as a hedge against inflation. And this article is also on our website under news as well, news and events as well. This chart is great. It shows the relative performance of investments since 2000, and it shows the trend. Yellow is obviously gold. It has outstripped any other asset class, which includes Australian house prices, including the rental return. Silver is next there. Then there's the ASX All Ordinaries, and then there's cash in the bank. So I always watch the Ainsley website because they are watching what's happening with gold and silver all the time. Sometimes their articles are a little bit complicated, and that's where I endeavour to find the ones that I know will be interesting to our clients and put them on our news and news and events website here. The bullion must read includes inflation just a gaslit number, which is a slight simplification of the article I showed you on the Ainsley one, as well as what is the gold-silver ratio. If you want to read more complex information, I do link in those articles to the Ainsley website. So for now, I mean, there's a million people you can be watching, but for Australia, Ainsley is my preferred go-to. So that is all for today. Thank you, everybody. I will stop sharing. Oops. Oh, okay. So I stopped sharing and then I showed you the Ainsley website. But anyway, I will put the link to our bullion must reads in the chat there. And I will also put the Ainsley News and Resources link in the chat. Okay. Thanks, everybody. The next one will be on... it is Wednesday the 19th of February. Because Cass is traveling a lot, we're doing it once a month now. So the next one will be in the evening, 6:30 p.m. daylight savings time. So that's Canberra time. So that's 5:30 Queensland time. Wednesday, the 19th of February. The links are all on our website as usual. Okay. Thanks very much, everybody. Bye.